there. But what will move today? HDFC AMC is one because the numbers came out and didn't quite get noticed by the street. I would also take a look once again at PSU banks, because PSU banks fired during the closing session, and of course on news. And Shimi Chaudhary, our Delhi bureau chief, got you that story that the government is looking at allowing fundraise for 5 key PSU banks, and you had that entire index also rise up. But PSU banks firing, keep an eye on that. Will IT see some recovery, because HCL Tech perhaps did not deserve the kind of beating that it got? That's something that you need to look out for as well. But stock specific, HDFC AMC first on my radar. Jefferies has maintained a buy with a target price of 5,000 rupees. They say it's a strong operating performance aided by yields. Lower investment income was moderated in reported earnings. Industry net inflows remain strong, and watch out for scheme performance and market share trends. Morgan Stanley also has a positive view. They've maintained equal weight with a target of 4120. So not as optimistic as Jefferies, but definitely on the upside. Operating profit beat driven by higher equity yields, says Morgan Stanley. High yields on full impact of rationalization of Q2 commissions, and other half of the beat was driven by cost control. They also expect revenues and PAT growth to moderate to 16% in FY26. IRFC is the other one that I thought was interesting, because remember, you also saw a bit of a spike and a bit of a relief in your defense, railway kind of a space. IRFC yesterday was already 5.5% up. They will be getting a deal to finance 3,167 crores for Jharkhand mines. In fact, that entire PFC, REC, IREDA, everything was zooming yesterday. So this space, I thought, would also be interesting to see, an IRFC in focus. BSE is the other one. So I know enough said and done about BSE. Has been going up, was up about 6% yesterday. I mean, we should just pull up the monthly chart as well, because this has been one big winner. Now, Nuvama has initiated a buy on BSE with a target of 6,730 rupees. So a hefty upside there. They're saying that derivatives to scale up despite regulatory tightening, lower clearing charges to send margins soaring. I thought this line was interesting. Lower clearing charges to send margins soaring. Robust structure, multiple streams to propel revenue growth. Ambit has also come out with a note. They've initiated a buy with a target price of 7,000 rupees on BSE. Premium growth has multiple drivers, they say, beyond penetration, on the road to a more fragmented market. Regulatory headwinds, the villain in the penetration story. According to Ambit, of course, turnaround opportunity could offset near-term headwinds, they say, and they say that the company has room to expand margins despite the tech spend. BSE Star is a cash cow in the making, says Ambit. So yes, enough focus on BSE, but then the kind of optimism that we've seen with new notes, I think there might be a further uptick that you could see today.
Very interesting, and certainly a stock to watch in trade today. I have 3 stocks as well. HeroMoto is the first one that I want to talk about, and this is on account of a launch in the scooter segment. But remember, the scooter segment not very large for HeroMoto. In fact, it has less than a 1% share in the overall scooter segment for India. It has launched Destiny 125 that goes up against the likes of Honda's Activa, which is the market leader in the space, priced at 80,450 to 90,300. It is positive because any incremental offering in the space will perhaps move the needle to a certain extent on volumes for HeroMoto. It is, of course, a very large player, and so therefore distribution network simply by dint of that, it would have access to a large market. I must point out that I'm not particularly kicked about the names that they choose. They've got Zoom, which is the other scooter in the stable, which is spelt with an X, by the way. Premier Energy is the second counter that I want to talk about. Subsidiaries have received multiple orders of 1,460 crore rupees, and this is from independent power producers. I'll name them. Basically for solar modules to the extent of 1,041 crore rupees, and you have solar cells of 419 crore rupees. This is something that is going to be split between 3 subsidiaries. So it's positive. The last one that I'll talk about is Shoppers Stop. strong set of numbers coming through for the company. You have revenue growth of 11.5% or thereabouts, consolidated basis, 1,379 crore rupees is the number. The margins have come in pretty solid, 17.8%, slight expansion versus the comparable quarter, and you have a net profit growth of 42%. So that's certainly something to watch very closely. Incidentally, a couple of operational metrics to watch. The average transaction value has gone up, and the premium category's contribution has also gone up quite substantially, and it remains elevated, which is a positive from the margins perspective.
Yeah, which explains the uptick in margins, and which is why a bit of a surprise on Shoppers Stop numbers, because I don't think too many people worked with these numbers. So I would reckon, Alex, that this one has the potential to be that mid-sized large mover on open. So keep that at the back of your mind, Shoppers Stop for sure. I thought the numbers from Network 18 Media were disappointing. Revenues were down 23%. There is an EBITDA loss. There is a net loss, which has expanded to 1,400 crores versus a loss of 102 crores. So keep an eye out. Maybe a bit of sulking could not be ruled out here. Welspun Corp is interesting, has signed an MOU with Saudi Aramco for strategic cooperation to establish LSAW pipes, a line pipe manufacturing capacity in Saudi Arabia. Remember, Welspun has a fair degree of presence in global markets, US and Middle East. And now that this is also happening, it's interesting. Remember, it's just an MOU, by the way. And not all MOUs see the light of the day or see the outcome the way they are supposed to, but could be interesting. So keep an eye out. And guys, I'm squeezing in a brokerage note in between, because we've been now talking about the pain in the MFI system for a while. Goldman is only corroborating that further for the quarter. So they have come out with a note on Credit Access Grameen, but use that as a clutch for the entire MFI space. So they are maintaining a sell with the target price of 577, by the way. The current price is 959. They say that the bureau data is showing worsening MFI trends. Relaxed MFIN guardrails are a core problem and there's a core problem of over-leveraging, which stays. They believe MFI companies will see higher delinquencies in the second half, and they see the impact of fresh liquidity due to higher loan losses reported by select NBFC MFI. So watch out for that whole bucket. We know the stocks have corrected a bit, but if indeed the pain stays, then this downtick that largely we've seen over the last 12 months might not be over. Stock specific, watch out for Credit Access Grameen. Won't be surprised if there's a bit of a lull today in an otherwise sideways market with maybe, just maybe, a bit of positive bias. Let's wait and watch. My top three.
Just one more note, since we're talking about notes, which I think we'll quickly talk about, is Macquarie on QSRs. I thought that we can just highlight for a second. So they have talked about channel checks pointing to a recovery in growth momentum across restaurants. They see a large growth opportunity. KFC and McDonald's top of our proprietary restaurant brand index. Proposed tax reduction in Feb budget could see industry same-store sales growth accelerate. Devyani should see EBITDA growth which is stronger versus Sapphire, and pecking orders Devyani, Westlife, Sapphire, Jubilant. But they have an initiate outperform on Devyani, on Sapphire, both of them. Devyani's target price is 230, Sapphire's is 390. And just the point about demand recovery from current lows, I thought was important. So that's one perhaps I quickly wanted to mention.